Hello, everyone. Good morning, good afternoon. Welcome back to the breakfast show. Quick earnings recap in the morning, and then we will be back in the afternoon after hours for Meta and Microsoft. First off, good morning, Jose. How are you today?
Pretty good, Neil. And like you mentioned, pretty busy day for us today. We're going to be here and then for some earnings later today, as it is going to be pretty crucial for a lot of our stocks and AI investments and just everything in general. So pretty excited for this week, Neil. Hope you're doing better. It seems like you're a lot better from last week. So I'm happy to see that as well.
A lot better. Thank you very much. And yeah, it's a busy day today. Most of the companies decided that it was a good idea to report after hours today. Microsoft, Meta, ARM, Qualcomm, all interested to us. So we'll try and do our best. To cover most of it. Today in the AM, we have an hour before the market opens. Vertiv just reported, so we can talk a little bit about that, and then answer, of course, some questions in the chat. Of course, I think a lot of questions will come in for what has already happened yesterday with maybe Sofi, Pypl, Novo Nordisk, United Health, or some other companies out there. Marvell is also moving. I've seen a little announcements from that. We've got even more AMD price targets raises. So I guess the analysts were waiting for the stock to go up for them to actually make some moves. So we'll discuss that in this video. Yes.
Yeah, it's crazy how just in 24 hours, right, Neil, we've had so much. I saw, like you mentioned, Sofi had earnings yesterday. You did that episode where you replaced me. I wasn't even invited for yesterday's stream.
You wanted to sleep.
Then after, and then after hours, I did see some stuff happening. Again, I don't follow the stock, so maybe we might have some people there here that might want to hear about that. But yeah, I mean, I woke up with that Marvell moving, which I still haven't read too much, but Vertiv definitely brought some nice bullish sentiment, I think, for AI space in general.
Yeah, so Marvell also has some price target raises, so we can look at that. But quickly touching on Sofi, yes, this is the new Chelsea jersey with the world champion badge, because, well, why not? So Sofi yesterday reported stock went up 18% when the market opens. Pretty crazy. Closed the day at up 6.6%. And then after hours, now pre-market stock is down 8% because of a stock offering $1.8 billion that can run up to, I think, 1.72 billion or so. Dilution, yes, it is going to be dilutive. So people were like, oh, but why couldn't they say this before the earnings? Why wait when the stock goes up? Doesn't make any sense, blah, blah, blah. Noto said they didn't need the money. Lots of overreaction, lots of overreaction as always. So the price now is, I released a video half an hour ago. The price is back to where it was a week ago. Okay, stock is still up 200% over the last 12 months. It's still up
Nice.
more than double since the April lows. The quarter did not, nothing changed. The quarter was still one of the best quarters they've ever reported. Guidance has been raised, and guidance does not change, right? They told us what the guidance is going to be for fiscal 25, knowing very well what was about to be released after hours. I'm pretty sure there are some rules out there that you have to do this after the market is closed and not during the market, especially not during an earnings report and an earnings call. And so, yeah, to me, overreaction. I hold already quite a lot of Sofi, but if it does drop even lower, or maybe even today, if I really feel like it, I might just increase my position because it was an amazing quarter. And so, yeah, nothing more to add there. Just a lot of drama as always. Maybe some people have high expectations, unrealistic expectations that, oh, short squeeze this, short squeeze that, but no. And the same with Rocket Lab. Rocket Lab, I did trim last week. Like I said, $51 or so. We're now at 43. I've got time with Rocket Lab. If we can drop a little bit lower, might start to add a little bit more. But if not, I'm fine waiting for the next earnings report, getting a little bit more information on Neutron and all of that. So the thing with the market right now is that you have time. There's no reason to chase anything. Same with Novo Nordisk, same with United Health. These turnaround stories take time, so there's no reason to rush into all of these things.
Yeah, yeah, agree, Neil. And I feel like that's the thing with any market, right? You don't have to chase to be a good investor. The market always gives us opportunities, and sometimes those opportunities are given for a long time, meaning maybe stock prices will stay down for a while in certain stocks, and we don't need to see them in 2x in a few months like we've seen in the past, right? That's completely not normal in the overall market right now. Neil, so I don't know if I was kind of taking a closer look at Vertiv. So Vertiv did report earnings this morning. Maybe I can share some screen. I did highlight some of the things that I was keeping. I read through the press release that were pretty exciting. Just give me one quick second, though, to pull the right screens up. All right. Amateur hour here. My apologies. Share screen.
So you see, this is what happens when you don't show up for a day.
Definitely, Neil. So first thing, Vertiv did report earnings this morning. The call hasn't happened yet. It happens at 11 o'clock, I believe. So it's during the market times. But we did see some great commentary from just the press release and the slideshow. So net sales, Neil, were up. Net sales up 35%. Organic order growth were up 15% year over year. Now, as an AI in general investor, this is a company, for those that are not familiar, let's just look at their website really quick so everybody can be familiar with them. This is a company that that provides a lot of AI infrastructure solutions. They provide kind of the power solutions when you're building a data center, the thermal management. They also obviously provide kind of some form of monitoring or management software solutions and some racks enclosures. So if you want to build an AI data center, this is one of the players you go with. Nvidia actually has a great partnership collaboration where some data centers in Europe are actually being built at this template that Vertiv and some other companies have kind of created, so they can start to build these AI factories at rapid pace and be able to repeat them over and over and over again. So the thing that really got me excited, Neil, was we did see from the executive chairman that what we're seeing in the data center industry today goes well beyond the next few years. This is a technological transformation that we believe will drive sustained long-term growth. We plan to invest resolutely and rationally, both organically and through acquisitions, to strengthen our market leadership and capitalize on this latest significant development as the digital age progresses. So, to me, the biggest thing here is that first line. What we're seeing in the data center industry goes well beyond the next few years. And that's kind of one of the biggest worries about AI. It's like, hey, AI just came out of nowhere. Is it only going to come here for a year, 2 years, and then like disappear like nothing? But it seems like that's not what's happening. This is something that's going to continue. We're going to continue to see these massive investments in AI infrastructure. So I thought that line was pretty cool. The other thing, Neil, is they did update their fiscal year guidance. And I do believe the stock is up about 7-8%, sitting at closer to $154, which is pretty insane. But they mentioned, given their strong backlog and pipelines, they are raising their full year 2025 guidance across most key metrics. We now expect organic sales growth of 24%, up from 18%. So that's a nice growth rate there. I think that's like a 33-40% improvement on just organic sales growth from what they expected. So I think right there just continues to solidify this bullish sentiment of the AI space. And you can take it with whoever. If you are an AMD investor, if you're an Nvidia investor, if you're a Broadcom investor, if you're maybe a Supermicro investor, whoever, some form of AI investor, the overall thesis is that this AI market is pretty much just getting started. Before I look at the presentation, Neo, any thoughts here from what we saw from at least these few points from Vertiv?
No, I mean, if we go back 3 months ago, it was a bit all over the place, right? We've had various things we had to take into consideration, some uncertainty and all of that. Stock was also reacting quite badly. I remember, of course, it did recover since then, a V-shaped recovery like. But the comments that we're hearing right now, black on white here, we're not done yet. I mean, this company is still growing and is still expected to grow quite a lot over the next coming years. And if they are saying it, I mean, that's a pretty good sign. It is one of these infrastructure layers that we've been talking about for a while. So the moment that they say, oh, actually, we are already seeing some slowdowns and things are going well, then okay, maybe we should start thinking about the other players on top of it. But as long as they say that things are still looking quite rosy.
Yeah. And to that point, right now, I mean, this is a company that builds infrastructure, and the infrastructure is not something that can be built right away. So if you're making a contract with them, it could be some data centers that might be starting to be built up a year, 2 years from now. We saw that backlog. So a data center starting to be built up 2 years ago, 2 years from now, after you put the AI, after you put kind of the cooling and the power solution, it still takes time to get it up and running. So it kind of gives you that sentiment that the AI market is at least pretty healthy for the foreseeable future. And a few other things that I thought were interesting from at least the slideshow. Again, we haven't gotten the earnings call. They mentioned, Neil, that the pricing continues to be favorable, which is pretty weird. I wouldn't say weird, but it is an eye-opening because this tends to be a very competitive market. At least with the infrastructure, there's a lot of competition in this space. So you would think that maybe pricing would be still more in the favor of the buyer and not the seller, but it seems like it's still a seller market here. The other thing is tariffs are still uncertain, fluid situation for them. I guess depending if we get better. Well, we did see, I think, from Trump that August 1st is the final deadline for sure for everything. So maybe after that we get a rechange or re-update on guidance. Maybe they're being a little bit too conservative with guidance, and you can kind of see an improvement from there. Let's see. I haven't completely looked at the slideshow, but you're still seeing a growth in adjusted operating profits. You did see a decrease in free cash flow. The biggest thing is this is an at the end of the day, they're selling hardware. So you need that cash to build that, to buy that equipment, to then resell that equipment. So you kind of tend to have working capital and cash a lot higher. most of the growth is coming from the America regions, and that's their biggest markets. Obviously, this is where AI is really growing at the moment. We've heard potentials from Europe expanding dramatically in this AI race, trying to play catch up. So maybe the Europe market would eventually be a nice growth opportunity for Vertiv there. Let me just see if we have anything else. Mm, I did see this collaboration with Oklo. I've kind of heard the top line, but I don't know exactly how crucial it is. But it is something that they did note here with some of their customers. The customers with CoreWeave. CoreWeave was one of the first to deploy the GB300 using, it seems, Vertiv's cooling solution. And then they have a collaboration for future power with Oklo. So earnings I thought were interesting. I mean, I'm not a Vertiv shareholder. If I was, at least on the top line numbers, you rose guidance. You mentioned this market is still pretty strong. I think the tailwind is still there. I was more curious, Neil, as an AI investor, what it meant for everything. Captain Harris had a question here. Would you buy Vertiv with this valuation? Let me show it real quick. Would you buy Vertiv with this valuation, or would you wait for a pullback? The only thing I would say, Neil, I think we talked about it in the past, is this is at the end of the day a company that's dependent on the AI market. So it's going to move very similar to a lot of my AI companies. So it's more of like, do I want to continue to grow my exposure in the AI space through power infrastructure, which will most likely move with AI chips? Because if you're building data centers, you're going to need more AI chips. So I think that it's going to correlate a lot with like your Nvidias, your AMDs. Maybe it might perform better, but I think the correlation would be very similar or moving in the same trend. That if I want to increase my AI investments, I'd rather look in kind of like the software space or something else that doesn't depend too much on kind of like the infrastructure, because I already have kind of my infrastructure placed with the AI chips. So I would say even if valuation drops, unless it's a sole thing, unless Vertiv is the only one going down, then I'd rather look at AI semiconductor companies instead.
I share the same sentiment. I think you said it on Monday. You don't have to own everything, right? You don't have to own everything. We own specific things in the AI space, in the semiconductor space, and that's good enough. Like, even if Vertiv is a good company, it doesn't mean we have to own it. We own what we like. We own what we know. We might underperform in the short run. We might outperform in the short run, but it's all about the long-term potential, long-term gains here. And if we're happy with what we own, we have the exposure that we need, good enough. Like, even if, let's say, Vertiv crashes 50%, might be very attractive, but that doesn't mean that I have to own it.
Agree there, right? And it's just because we don't own it doesn't mean we're bullish or bearish against it. It just means we feel that our exposure could correlate very similar to it. So it doesn't really add much more to our portfolio than what we already have. And I think sometimes it's like when we don't own a stock, it makes it seem like we're bearish in it. But it's all about portfolio allocation and how everybody handles that.
Correct. I do want to touch real quick on the Marvell news. So we have here from Morgan Stanley a note here: maintains equal weight, raises price target to $80 from $73. The analyst sees optical AI opportunity as more durable and high margin than a disappointing ASIC segment. So risk factor here, they say its ASIC business has been disappointing, limiting overall sentiment upside. They're raising their 2026, what is this? MW EPS multiple? Okay. From 32 times to 35 times, increasing the price target to from $73 to $80 on $2.28 of. Do you know what the MW means in this case?
No, I don't. That's pretty interesting. I don't. My electrical side right now is saying megawatts or megawatts
me
right
too,
now, but it's
but what's a megawatt EPS?
Maybe someone in the chat can can let us know what MW is. Multiple. I don't know.
Maybe no weighted. weighted
I don't know.
average EP. I don't know. At first, I was like, also, well, what is this guy talking about? Megawatt EPS, is this like a new type of term? But yeah, okay, that's Marvell. So basically, here multiple expansion gets you to a higher price target. We then have AMD, also Morgan Stanley,
Oh, nice.
maintains equal weight, but raises the price target from 121 to 185 because mean weighted.
Mean weighted. Thank you, so appreciate it.
I knew there was a weighted there. I just
It had to be with something with weight. Yeah.
yeah. So thank you for that. That's why we have chat here. So AMD, 121 to now 185. I wonder if the price of the stock being closer to 185 than 121 has something to do with this. But they see stronger AI and PC demand, lifting near-term visibility. Price target here as well reflects higher multiple on unchanged EPS. So same story, higher multiple gives you here
Yeah.
they basically go from 22x to 33x on here again the megawatt EPS 2026. The mean
It's so weird that I don't think for AMD es- especially, I mean, if you're looking at forward multiples, which is what you're looking here with 2026 earnings per share, a 33 doesn't seem that crazy.
yeah, no, it's not. It's the premium that you should be getting if you are growing very fast.
Yeah.
That's basically it. Remember, Apple is not that far away from it, right? I think Apple is
Oh
still
man.
30 times or something like that. So yeah, good momentum for AMD. But I mean, it's quite interesting. No, it's quite interesting that we're getting all of these moves for AMD a week before the earnings report.
Yeah.
It's
I
usually
did
they
see
know
Nvidia
something.
also
Yeah,
got
Nvidia
a
also
price
had
target upgrade.
yeah.
You don't want to show that one, Neil? Come on.
Yeah, but
What is
hello,
this?
I have like an order to go through.
Okay. I thought you were pulling through. Okay, my bad. Go ahead.
No,
Continue. I
I also had
disrespected the process.
a SoFi one, which we can real quick since we did talk a little bit about that. SoFi at Needham maintains buy rating, raises price target to $25 from $20. And here they say analysts sees loan platform strength and $1.5 billion capital raise, boosting confidence in hitting 2026 EPS target. So the complete opposite to what all of the comments have been saying, or all of the people freaking out over the last 12 hours. And here we have Ariel. Always told you guys, AMD.
This guy's gaslighting us. What's going on here?
For those that are not aware, we have a bet with Ariel. If AMD does not close out the year above $120, I have to give him an AMD share. And if it does close above 120, he has to become a member of both of our channels. He's basically a winner here because, like, what does it cost to become a member of our channel? Like nothing.
Not much. Not
Nothing.
even like a
Not even
fifth,
a coffee.
a 20th. Yeah.
It's not even a coffee at Starbucks. So yeah, SoFi here again, positive sentiment because it makes sense. It was an amazing quarter, good performance, and the 2026 EPS target sits at 67 cents at the midpoint. Analysts still think it's going to come way lower than that. Analysts have been wrong for the last 3 years. So that was SoFi. As for your precious Nvidia, I had I almost pulled up the Apple one. Whew, dodged the bullet there.
And we got some questions. Don't worry, we'll pull them up after this, guys. I see some questions coming in.
Yeah, so we have the Nvidia, also Morgan Stanley, overweight, raises price target to $200 from $170. They see Blackwell demand that's higher than the supply, with second half supply boost driving further EPS momentum, and Nvidia remains their top pick in semi. So they see here they're also raising their multiple to 33x on the 2026 EPS of $6.02. So again, Morgan Stanley here in the mood of raising multiples right now.
I agree, Neil. And first, let me just say, Kevin here, these analysts desperate to be relevant. I mean, we kind of see this, right, Neil? It's um, when stocks were at a bottom, you barely heard of any price target upgrades. Most likely, you were hearing maybe the opposite, or kind of like no movement at all. But now that all these stocks are going up, everybody wants to continue to give a nice price target. We also see Eddie, he mentions when it goes to 195, they'll raise to 205 and continue. And then when it starts to drop, they'll do the same. Now, Grizzly mentions, I hope AMD dips a bit so I can get it. Grizzly, interesting. I want to say the market always gives us opportunity, right? It does, and we have to make sure we take those opportunities when given. Christian here, Neil, I don't follow macro world. I don't know if you know anything about any economic numbers today that might
Yeah,
be
we have
appearing.
here Michiel sharing 3% versus 2.6% expected
Oh wow,
GDP growth for Q2. Of course, these things will get revised, I think, 3 times.
yeah. Let's see
And
what
we
else
also
we
had
have.
some other number, I think ADP numbers or something like that, but I don't think someone wrote. Maybe someone wrote that before, but it's not that important. The GDP number, again, like I said, it's going to change. There are a couple of revisions when we get the GDP numbers.
Then we continue here with questions, Neil. I am at SSP. I don't know if you can pull up really quick. NVTS, Navitas. I think yesterday it dropped. They're gonna arrest Jose. That wasn't me. That was Neil. They're
Yeah,
going after Neil.
every day
I
they
think
try.
someone they didn't.
Every day they try, they fail.
So Navitas took a hit yesterday. They fell. uh, um,
Yeah, they fell 12%.
Yeah, and I don't know if you saw Neil yesterday on Semiconductor announced that they were another one that's collaborating with Nvidia for that 800-volt partnership thing. On Semiconductor didn't barely moved on those news, but on it's also kind of a 20 billion plus market cap. So I believe maybe the market doesn't see much growth there. I'm starting to enjoy Navitas. Neil, I know I talked about a yellow bet on this one when we did it. Unfortunately, not on this stream, but I did a stream with Neil a few days ago. I did sell out of my Navitas. We can go back and pull the receipts on a midstream when Neil was kind of sick and dying. Now, those were just YOLO plays, right? For me, Neil. I am looking into this. I think one of the markets that has really grabbed my attention right now in this AI space is the power infrastructure space. I think the power infrastructure space is going to be so exciting with the next generations of racks that we're going. I mean, Vera Rubin is going to be like almost the amount of power you need there is crazy. That I think there are a lot of power plays in the semiconductor space that are being slept on or have various growth opportunities, even though they have kind of pulled up. And I might be doing a video on them. Navitas is one of them that's more like the Hail Mary style, where if it catches the ball, it'll be really great. This is the one with the biggest risk, but it definitely has opportunities. I think they have opportunity. This one on Semiconductor, there's a lot of European companies, a lot of Taiwanese companies that have this market, and I've been doing some research, but that's the one that has my attention right now. Yeah, I don't every place we talk about, everyone who's talking about data centers, they talk about power infrastructure and power solutions. So this is one that at the 6 I like for my trading purposes, Neil. So anything around the 6. As a long-term investor, I still don't know. I haven't found a price yet.
Maybe
But
the gap. I mean,
yeah, there's potential.
the gap here is quite big when this was announced or they had their blog that came out. It was basically at $2. I don't know if you're going to get it at $2 anymore, but yeah, I mean, there are some questions.
I also want to say sometimes they have earnings this Monday, Neil. And I get a lot of questions in some of the Nvidia's videos that I do. I don't do much, but I do. It's like, how well do I think this company is going to do with this partnership with Nvidia this earnings? And I wonder if that's what the market is expecting. I wonder if the market is expecting a lot of growth this quarter. And I don't think it's going to give you growth this quarter. A lot of these is collaborations for future racks. Not for the not much for the Blackwell. I don't know if it's for the Blackwell Ultra. I have to relook at it, but it's more for like the Vera and the Rubin platform, which is still about a year out. So to me, there could be, and I don't want to scare anybody, but there could be this expectation that you expect a lot of revenue growth this quarter from some form of Nvidia partnership, where if you do see that revenue growth, it's probably at least 2 quarters away, and that could trigger a sell-off. Now, if they do give us guidance, and this is the tricky part about investing, if they give us guidance and they mention Nvidia like 30,000 times in their press release, that can definitely pump up the stock a little bit more. Oh, look, we're doing really good with this collaboration with Nvidia. They're looking really healthy. They've already placed a lot of early orders or something like this, and you kind of see it in the backlog. Then that can create a bullish sentiment. But I think I'm going to be a little bit more cautious in Nvidia, still at these $7. If we do get to those 6, I might re-enter for another trading trade there.
Before we talk a little bit about our other play, Applied Digital, not Material.
Yeah, that one I still have.
They report today, no? I think.
Do they?
Yeah.
So they do.
That's
yes,
going to be
they
interesting.
They actually
some question here about iron. I own a little bit of iron, and it's now at a very interesting spot. It's basically where previously there was resistance at around $16 or so. Let's see if that resistance can now turn into support. It's a bit in no man's land on a black magic technical analysis basis. It's under the 20-day moving average. It still has some ways to go until it reaches the 50 and the 200-day one. I'm in no rush to add more to my position, since again these are YOLO bets for me that could work out very well, because I do like what they've been doing, but I'm in no rush to start growing my position in iron at the moment. Usually when I open up these types of smaller positions, I like to have at least one earnings report and call in order for me to get to learn even more about the future prospects of a company. Same thing I did with the one that shall not be named, Nebius. I wanted to learn more about how management speaks during earnings call, the tone of it all, and it gives me just a bit more confidence. So I do the same here with iron. Same with United Health. I've said it time and time again. I had a small position, but I'm not going to add until the next earnings report and call, which happened yesterday. Stock went down even more. But when you hear management speak, the way they answer questions, it gives you a little bit more information. I think we can say the same thing with the other companies that we follow, right? When you listen to what they say and the way they say it, you can get more of a sentiment. Our other partner in crime here, Roberto. Thank you for a super chat.
I'm praying for you. I read that.
Boys need help. Sold AMD at 140, Nvidia at 162. All the catalysts for a pullback I was seeing are gone. Do I buy back in at these levels? Pray for me. Yeah, I mean, I get.
What would you do, Neil?
Unfortunately, I know the feeling of these types of things. What would I do? I mean, we are in earnings season and AMD reports next week, so I mean, it has gone. Just let me see. It's very overbought. AMD is very overbought at the moment. So
yeah. I don't want to be that negative Nancy or whatever it's called. But it's like for AMD as well, it takes time to ramp up a product, right? You don't have. They just announced the MI355. You don't go from 0 to a few billion in 1 quarter. Especially the ramp up process is real.
But it's the guidance. It's the guidance. I'm telling you.
And that's the thing. Yeah, it is. It's definitely the guidance. It definitely is. So that's the thing. But historically, Lisa has been very conservative with guidance. If she continues that conservatism and AMD doesn't deliver, I could see. I wouldn't be surprised. I'm not hoping for it right now. I'm definitely not hoping for it. But it is possible for a pullback, and the market always gives us opportunities. It really does, Roberto. This does mean if the FOMO is real, I would try to sometimes control the FOMO by doing a very, very small dollar cost average so I can feel like I'm back in the game. And that sometimes helps control the emotional plays that can make you do some bad things in the future. So a small DCA, very, very small DCA, just to say, look, I'm back in it, would help calm my nerves. But I think the market gives us opportunity. It really does. I mean, we can have a moment where China and US have some more tensions, and the Trump administration just goes, look, we're not sending any more AI chips back to China. Stocks could drop like 10% like nothing if that happens. And it's not impossible, in my opinion. You can hear some random deep seek moment. Unfortunately, we don't know when it's going to happen. The only thing we can do is when they happen, we have to understand our stock so we can be like, oh, look, this is actually a buying opportunity. I don't think it'll be similar to DeepSeek, but something where some form of software innovation makes it seem like data centers aren't really needed. So yeah, I mean, opportunities come, but can you wait out till those opportunities is a whole different question.
Yeah, I agree, and of course, I agree with this as well. I guess it depends, right? So, Roberto, if you want to own them for the long run, then I see no reason why you shouldn't like DCA into it. Like if you open now and it drops a little, then you can add more in the future. If you open now and it goes up, then your initial positioning is going up. So I guess it's up to you what you want to do. If it's for a trade, then again, yeah, we are in a tricky situation at the moment. Novo Nordisk did some preliminary reporting yesterday, and yeah, it's down another 5% before the market opens. This thing is now experiencing its largest drawdown in history. It's down 66, 67% or so from the peak. Yesterday, it was down 24% or 24% or so. And right now, it is apparently making its way to the two lines I drew quite a long time ago, I think on the stream. So sometimes I guess the black magic here does work. We do see here some support from back in September 2022 at around $47, $48 or so. It seems like the stock will open at around 51. So we are getting quite close. We are getting quite close to it. Again, with Novo Nordisk, I said yesterday in my video, it's a turnaround that will take time. The new CEO that comes in, it's someone that has been at the company for 33 years. Okay, he started at the company as an office clerk and now is CEO 33 years later. So they decided to go with someone from the inside and not the outside, which also means that the adaptation period is going to be much, much shorter. Could be a good thing. Guidance has been lowered by quite a lot. And now they are trying to get me yet again here. I am streaming, guys. I am streaming.
You gotta stop.
Leave me alone. Leave me alone.
In my mind, Neil, for some reason, I feel like it's a family member outside your room just walking around with the siren to mess with you.
You may imagine when I have kids. It's like it's like the kid is calling the police actually. But yeah, with Novo Nordisk, guidance has been lowered by quite a lot. Like before, midpoint growth was 17%, and now it's like only 11%. But okay, with an incoming CEO replacing the other one, I guess it makes a little bit of sense to lower the expectations for him to meet or maybe even beat it in the longer run. Same thing with here.
That's crazy. That chart reminded me. It gave flashbacks to the like that after post-COVID. Yeah. Not the COVID crash, but that post-COVID game.
No, for sure. For sure. Same with United Health. I mean, okay, United Health had some other things that happened there, but here is where you see that crash. You might see a double bottom here at around $261 or so. EPS is still expected to be at least 16 cents for this year, and they expect to go back into growth mode in 2026, which means you're not paying that much for this business that is still growing revenue. Okay, margins, it will take time, but it is a fixable problem for this company. I understand people that don't want to invest in these types of businesses, but there is definitely, in my opinion, money to be made here for sure. The the one with the siren
Yeah.
is Christian Horner. I think he's busy, like in maybe retirement or maybe trying to sign some Ferrari papers.
Let's see, what else do we have? So Marvell, let's talk outside. We talked a little bit about it,
Yeah, wait, the
Neil, right? With
partnership.
Paul. Paul's
I
asking here.
didn't.
Yeah, that's the only thing we didn't. So we saw a price target upgrade. Now it seems like I saw some quick news on partnership.
Yeah, here.
With an Asian company. Let's see what we have here.
Fortunately, it's just half a Bloomberg a screenshot, but Marvell to collaborate with Korean AI semiconductor company Rebellions. They're going to offer. Yeah,
To be
me
honest,
neither.
I've never heard of them.
The only Korean rebellions or teams that I've heard of is Blackpink and some music artists, but so it seems like they're going to offer a high-performance, energy-efficient AI system tailored for regionally driven and sovereign-backed AI initiatives across APAC and the Middle East. This collaboration will enable Rebellions to design customer-specific AI accelerators utilizing Marvell custom platform, leveraging advanced packaging, high-speed, what is this, SerDes, and die-to-die interconnects, resulting in a tightly integrated end-to-end rack solution built for a high-performance, energy-efficient AI inference at scale. Talking about Marvell, but Marvell in this case, I did go and watch the new Fantastic Four movie yesterday.
No one was talking about Marvel, Neil.
Not bad.
No, I mean, obviously this is pretty good. I think this is exciting. I would have to do a little bit more. I mean, the market is reacting positive to this. I wonder if Rebellions is a company that is embarrassing. I don't know too much about. Maybe I do know about it, but it's probably slipping my mind. But just having another kind of AI engineering firm, it seems, building AI chips for their customers using your products is going to be great for their AI custom solutions. I mean, this is a company, Neil, that's before this pull up was closer to $60 billion market cap. It's one of the smallest AI companies that has some success. I mean, they're working with big customers already for both CPUs and ASIC GPU designs. I could still see this being a multi-bagger, but it's one with risk. It definitely comes with risk. When you're not the top player, we can definitely see that, especially in this AI space. You want to go with the AI, with the top leaders. That's why you see Nvidia and Broadcom kind of being a nice amount of winners. But still bullish on Marvell. I own it. Last night I had a dream that maybe I should buy more, but I don't know. After this pull up, I think I'll be a little bit patient on it. But it's a good position in my portfolio. I'm happy.
Yeah.
I want to get more
when
into
you
this
say
one.
like risky, for those that are listening, it's not the same category of risk as the Navitas and the Iron and the Applied Digital that we've talked about before. It's just plainly risk reward wise compared to maybe a Broadcom or other players in that field. It's definitely a much better company than the bets that we're making with the other ones.
Yeah, definitely. I have to find another word for risky, but I agree. Like I mentioned, they have actual partnerships, they have actual revenue, they have actual products. I mean, they designed the Trainium 2 and I believe the Trainium 3 for AWS and Amazon. They just did their AI event where they have a lot more wins on not just AI accelerators, but kind of even CPUs as well for some big players. So there's opportunity here. It's just the risk that I like you mentioned. The risk I really wanted to say is it's very competitive, and in the competition market, there's nothing that says you can. I can't see why the market can easily just do all Broadcom if they want it. I mean, obviously customers like to have diversification, and that's a strength. They never want to be dependent on one player. But in theory, they can all just say, look, I don't care about this diversification of customers. I just want to go all with Broadcom. And that's the thing.
Yeah. First of all, thank you, Paul. Really appreciate that. Second of all, yeah, with Marvell, it's I mean, it's you get a new customer, stock goes up. You lose a big customer, your stock will get crushed, as we've seen over the last couple of months here. Quickly touching on this one before jumping into another topic here. Do you guys own any dividend stocks? Is it a good moment to start buying them and be more defensive? I mean, we own dividend stocks purely because the companies started to pay a dividend, right? Google Alphabet didn't pay a dividend before, suddenly it does. Meta didn't pay a dividend.
Big Nvidia
Exactly.
dividend
Nvidia
investor.
pays you a cent every quarter. So I own dividend stocks, but I don't own them because they pay a dividend. I just own them because I like the company and it so happens to be paying me a dividend right now. Same with dLocal and same with Alibaba, for example. It's actually, yeah, Alibaba pays real money, you know. It's like for those that doubt it, I actually got paid by Alibaba. Real money, not monopoly money. So yeah, I don't own specific dividend stocks in my portfolio.
Mhm.
Although, logically speaking, you would think that it's a good idea to start looking for those high yield dividend paying stocks when we expect rates to come down. Because when rates will come down, people that usually like these types of plays will start looking for stocks that can pay them 4, 5, 6% or so yield now that rates are coming down. So yeah, if you're looking into that, being more defensive, trying this strategy, yes, it does make a lot of more sense to be looking for those plays before before interest rates do drop, and before, of course, the price of these stocks go up quite a lot. Um,
Thanks. Yeah. But just some comments here. My Tiger Marvell will have direct access to foreign region with this new South Korea venture. That's why it's interesting. I agree, right? Because normally I only think of Marvell with the big players, but there's obviously big players international, so that's there. Paul, I'll take note. I think Marvell update video would be great. Be working on that. Let's see. Um, Audi, I would rather have them buy back stocks than dividends.
100%
I
agree.
think I'm in the same boat as well.
But you can do both,
Um,
and they do both.
yeah,
Um,
yeah. Let's see. Thoughts on nuclear energy stocks? You guys are both very involved with the AI revolution, but I haven't heard much about investing into energy sector that's needed for this change. Um, I would just say kind of mirror my thoughts before, Neil, kind of with like I feel like energy stocks are going to be dependent on data center buildouts, which mean that they're going to be dependent on companies like Vertiv, and those data center buildouts are going to be dependent on AI chips. So they all kind of really trickle down in that same pool. And for me, I feel the most comfortable with the AI semiconductor market. So that's why I haven't really looked at it. And nuclear energy, I mean, from what I know with my very top level understanding, it's still at least the companies out there are still in early stages, and sometimes you could be patient and kind of some of the risk outweigh some of the risk. Neil, any thoughts there on kind of nuclear energy
I
stocks?
rather I rather let my companies deal with that, like the Metas and the Googles. Let them deal with it.
Mhm.
Invest in the necessary infrastructure and maybe companies as well, instead of me trying to pick out who's going to win. Of course, there are going to be winners, right? We've seen some of them already
Yeah.
go up quite a lot on future anticipation expectations, but I rather just let the Metas and the Google, even Amazon, just do what you do best, allocate your capital accordingly, and you probably know better than me in what to invest and what to buy. And so,
Yeah. And I think Phil might have the best idea here. Obviously, I mean, you have this kind of excitement in nuclear, so you're going to have CCTS. But for maybe someone who's excited into this market of the AI and wants some exposure into it, but doesn't know every individual company, an ETF approach is always the best. Now, I'm not saying go buy this. I don't know this ETF, but it just kind of brought that thought process there. Um, let's see what else you do have. Here, Neil, if you want to answer this really quick.
a fairly large PayPal position that I'm thinking of flipping over to Sofi. Ooh, that is. First of all, thank you for the super chat, JJ. Second of all, I mean, you're talking here about two of my, I wouldn't say, yeah, I would say favorite holdings, but for different reasons. Because PayPal, I just don't see why I should sell PayPal at these prices. It's just so underappreciated, undervalued. Even if I love SoFi a lot, I wouldn't cut my PayPal to buy more SoFi. Like I don't see a reason why you wouldn't want to keep unless you don't have SoFi, then yes, then. But I'd still want exposure to PayPal, to be honest. So maybe if you want, just cut it in half and put the rest in SoFi. But um, uh, I wouldn't get rid of PayPal at these prices at all, especially not after the latest report. I mean, triple beat for the quarter, and guidance was raised. Stock went down 8%. I mean, the market is sometimes stupid, but I mean, a lot of the times. So yeah, if it's fairly large, then yeah, you can maybe just make it a little bit smaller and then just get your SoFi position. Two good companies that I wouldn't want to sell one for the other. And to answer, someone asked me about another very difficult question here. PayPal shift for dLocal Adian. I own PayPal and dLocal. Like I said, still think they're very, very undervalued. I love Shift4, also good value. And Adian is an extremely, extremely good company. And so I'm biased because I own PayPal and dLocal, so I have to put them at the top. Makes sense. And then I'd probably still have to put Adian first because of the margin profile of that company. But if we talk purely about valuation, then it's Shift4 and then Adian. Plain and simple. You cannot go wrong with those companies, in my honest opinion. You will have to be patient with PayPal, that's for sure, and dLocal, it seems.
Neil, I don't know if you noticed this. We did get a question earlier on X. Is CJ the same one we had last time too, or is this a different
I don't know. It's
X
a
user now?
rare breed here. Rare breed
So hey
in
guys,
the tall grass.
late to the show, I was listening to Teradyne's call. They absolutely crushed it. So Teradyne is it's in the semiconductor market. You know, they do both a mixture of kind of I believe semiconductor equipment and the
Stock
robotics
is
market for industrial. Stock is up 13%. That's really good. But I think it's still down year to date from it. So congratulations. It's one that probably listened to the call really quickly to see what's happening in that space. I had another question here, Neil, and then maybe I'll pass it to you if you had any thoughts or any questions you want to grab. So Waldo, Jose, with your CoreWeave IPO success luck, I would say more luck than anything. What do you think about buying Figma IPO? So first, Waldo, I didn't buy it at the IPO. I waited it out, and then we had kind of the I think it went up, but then we kind of had the tariffs, just a few, and then it pulled down. I got onto the pull down. I don't CoreWeave. I would say I know the AI market pretty well. I really do. At least when it comes to the AI infrastructure and the hardware side. And at least within that era. I don't know much about Figma, except that Adobe wanted to buy them. I've never used their products. I've never seen what kind of, I've never heard someone say, you know what, this would be great on Figma, yo. So for those reasons, I'm not going to be playing this IPO, even if a pullback. This is one that I'd rather kind of just keep a closer eye on.
I'll let you know if it drops enough to be interesting. I put some
All
price
right,
targets.
so so this is one where we'll have Neil give us a notification if it becomes interesting. But the main reason is I just don't know it too much in this business.
Yeah, apparently it's 40 times oversubscribed, the IPO for Figma. They want to go public at $16 billion, which is less than what Adobe offered them a couple of years ago, which is interesting. Put all of that together, it probably opens up at above $20 billion on the day.
Do you know how much out of that 16 billion valuation, Neil, how much are they just trying to raise? Or trying to sell off?
Let's see how much. But it's going to be very interesting, especially for the Adobe shareholders, because you will have an honest, not an honest comparison, apples to apples, but you'll have another player that will just get such a high multiple that it won't make any sense for Adobe to go down even more. Let's see. So they're looking to raise $1.18 billion by selling 37 million shares between $30 to $32 compared to the prior $25, $28 each. But it's a very interesting business that's growing very fast from what we've seen from their S1. I think we covered that a couple of weeks ago. It's very, very interesting. V here asked, why does New Holdings not go anywhere? So I mean, new, if we go all the way back to 2023, for example, was at $3.50. We're now at $12.60. But of course, yeah, it has been around this price range for over a year right now. Did go lower, did go higher as well. But with new, again, it's if you are looking for a long-term winner and you want to get exposure to Latin America and more specifically fintech that can expand into other segments, Nu is again one of those companies that has been executing quite flawlessly despite macroeconomic headwinds. I mean, in Brazil, interest rates are topping at 15%, I think, right now. They said it's not going to go higher than that. So, okay, you reach the top for that. Nu is a company you buy and you hold and you don't complain. Like you buy, you hold, and that's about it. Is it the PayPal curse? Maybe, but a PayPal curse is a good one because that means you can just keep on buying shares of an undervalued business, and then 5 years from now you'll thank yourself for buying the undervalued shares when nobody wanted to buy it. It's all a game about patience. Like I know especially over the last 2 years, we've had two great bullish years, right? Above 20% returns for the market. You've had companies go up 10x, you've had companies go 5x, 2x, 3x in a couple of weeks and months. And so everybody starts to think, oh, if my company only goes up 50%, that's a bad investment. But no, that's a very, very good investment, a terrific investment, actually. And so it's all about getting back to the normal investing mindset, and not about the degenerate gambler mindset that I have done myself more recently, and a lot of us have seen it more recently. To go into the open door questions that I've seen, open door, as you can see, at the start of July, this thing was trading at around 60 cents, and then went all the way to around $5. That's a 5x increase in less than a month. Of course, meme stock, momentum, short squeeze, you name it. Since the top, the stock is now down around close to 60% or so. I bought at $1, just $1,000, sold just above $3 and something. It's a 3x in a week. I'm not complaining. My initial investment paid for my holiday. And now I've seen some people, are you going to buy back or not? It's a good question. I mean, I still have some money in it. Could I buy back? I know that the meeting for the reverse split has been pushed forward, so it's not going to happen. But I think it had to happen 2 days ago. Obviously, it did not happen because the stock price did stay above $1, and it does have a lot of momentum, and so management does not want to interfere with that. We needed 10 consecutive days of staying above $1. Seems like that has worked out, and now it's up to the company to report earnings, I believe, next week, if I remember correctly. So we'll see. We'll see what happens. It's one of those long-term plays that can or cannot work. That's why you just put in tops 8% of your portfolio in it. Of course, if you like to play big and you put more, then of course you can win more, but you can also lose a lot more quite quickly here. So that's open door. We're probably going to cover it next week when we cover other things as well on the live stream. Do you guys follow Spotify? Spotify reported, Jose, I don't know if you follow Spotify, but before I click enter here, it has been doing incredibly well. You are
except recently. I thank you. I was gonna say I feel like it's done the monster.
Look at this.
Since like 2024. That's wild. Yeah.
Let me do the weekly so you can. This is insane.
That is wild. Yeah. That AI DJ.
Like right now with the pullback, it's still up 761% since the bottom of 2022. And it was basically almost a 10x.
That's wild.
For a company like Spotify. But it makes sense if you look at the business. Okay, maybe pull it up here on a fiscal.ai. The business has been doing very well. Revenue-wise, up and to the right, solid compounder, has been growing. What was it? 22, 21, then a dip here, 13%, but then 18 and 17% year-over-year growth for revenue. I think if we look at, I think cash flows are still a little bit lumpy for them, if I remember correctly, or maybe not anymore. No, okay, not anymore, it seems. That exploded. Free cash flow exploded right now. Still expected to grow. So we're going from last 12 months free cash flow, 2.6 billion, 2.6 billion euros, and it's expected to reach 4.42 billion in fiscal 2027. So Spotify, European company, of course, New York Stock Exchange listed, but I think you can also, yeah, you can definitely buy it in euros as well for my European friends here. The company has been doing extremely well. Very, very good leadership. Daniel Ek is an amazing founder and CEO. And so, yeah, this is what you get, a turnaround story. These companies exist, right? You don't have to be an AI player or whatnot.
Yeah.
You can make quite a lot of money with just looking at very, very good companies. And the market is actually open, Jose.
Oh my goodness! Come on,
we're
Neil.
having
You had one
so
job.
much,
You had one job.
we're having so much fun
Yeah.
that we forgot
And
the market.
I'm actually curious, Neil, from those watching, do you guys think we have Meta and who do we have? Meta and Microsoft today?
Meta,
Do you
Microsoft,
think
ARM, and Qualcomm.
between Meta and Microsoft, do you think any of them raise capex? If so, let me know. Or if both are going to raise capex. Neil, what are your thoughts?
I think Meta, yes. With everything that they've been doing, I think Meta, yes. Microsoft, I don't know. I have a feeling that they will just say, no, we still expect the same capex, but we expect it to grow in 26.
Okay. All right. Yeah, I think I think I'm leaning Meta's yes as well. I think Microsoft, if they are conservative here, and they decide not to embrace this AI market, I might start to get a little bearish on them, Neil.
Ooh, Marvell up 10%, by the way.
Nice. We have pretty nice day for semiconductor stocks. Nvidia is still on the red, down about 1.2%. AMD is down a little bit, but a bit of a pullback after the massive run up is not the worst thing. Let's see. Yeah, nothing too crazy. I just see some nice green overall.
Yeah, SoFi down 6-7% or so. Back to Novo Nordisk down 6%, AMD down a little bit, Rocket Lab flat, new 1.4% down. All the rest, I mean, I guess our applied digital one will have to wait until later today to see what
it's pretty much
happens
flat
there
right now.
Yeah. What do you expect?
I don't really. From applied, I don't know. Is this just now an OpenAI call where OpenAI is going to come in and talk and say, "Look, we order everything."
OpenAI /
To be honest, yeah, CoreWeave. That's what I meant. CoreWeave. Sorry, is this just a preemptive CoreWeave earnings call now? I would just like to see what are some of the updates on maybe any more data center build outs or how they're going to try to grow from here.
Yeah, no, fair enough. Other than that, of course, I have to mention Oscar for you, but this time it is green.
It's green. Wow, I didn't think I for some reason I always correlate Oscar to red.
Yeah, Oscar is green, 1.2% right now. Let's see, PayPal is green 0.3%, so not much. The one that should not be named is also green, 1.2%. Other than that, no, I think it seems like a good day overall.
How's Vertiv doing? Is it holding gains or?
Vertiv, let's see. Probably. Let's see if it wants to load. Vertiv, yeah, up 8.3% today.
Nice. So congratulations to all Vertiv shareholders.
4.2. It was 8.6 for the week, 4 for the day.
All right. Only half congratulations then, since it was only 4.
Half congratulations.
So just congrats.
Yeah. Last thing here, Palo Alto apparently is going to acquire a CyberArk for $25 billion cash and stock deal. So they'll receive, CyberArk investor will receive $45 in cash and 2.2005, that's very important, the 005 shares of Palo Alto for each CyberArk share, valuing the deal at around $25 billion, a 26% premium over CyberArk's 10-day average. And
Expected to close second half of 2026. Is that what he said? Or is that fiscal second half of 2026? Fiscal. Okay. So I don't know what year that is.
I think Palo Alto is already, yeah, it's anyways, I think, going to be next year. Palo Alto is, of course, down on the news, 7.54%. Over the last couple of days, actually, I've heard quite a lot of rumors that Palo Alto might acquire a company. First, it was SentinelOne, and now apparently...
Oh, yeah. I remember now. Yeah.
Now it's this one right here. So with that, don't be sad. Don't be sad. We will be back later today.
You'll be a little bit sad.
Yeah, you can be a little. But if you are, then make sure you are joining us for the Meta, Microsoft, Qualcomm, ARM, Applied Digital, and whoever else is reporting. But we are just going to cover we are definitely going to cover the big two, and then we'll see what the others are reporting. So make sure you hit that notification bell on, and we'll see